And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. 8 minutes after 6. I'm Stephen Grootes. I think the reason we'll remember today is probably because it really brings to an end a sort of era of legal cigarette production in South Africa. British American Tobacco closing their last factory here. It's in Heidelberg, 230 jobs going, as you've probably heard through the day. They say because of the illicit cigarette economy, what's going on with the illicit industry. And I'm sure at some point there's a conversation to be had about the longer term consequences of the lockdown, the ban there, which seemed to me unreasonable at the time. And the longer this goes on, seems more and more unreasonable to me now. But the ban on the sale of tobacco during the pandemic, I think only one other country did anything like it when it comes to tobacco. Well, obviously we'll speak to British American Tobacco about that. It's also sort of really leads to a bigger conversation about a much bigger issue in South Africa, which is literally the consequence of allowing so many people to break the law so often and what that does to legal businesses. And surely British American Tobacco is a victim of that. Now, I'm no fan of the tobacco industry. I'm sure you're aware of that. But even so, if we're going to have laws, we must enforce them. And we're clearly not able to do that in this industry. And that surely is a major, major problem. We'll speak to Johnny Moloto from British American Tobacco in just a moment. I can't believe that Nersa could make yet another mistake. And yet here we are. I mean, Nersa always manages to surprise, don't they? The energy regulator. Fiendishly difficult to sort out electricity tariffs sometimes. Lots of things to consider. But in this case, according to the MoneyWeb report, what essentially happened is that they actually created a situation in which it would appear tariffs were implemented in certain places that really seemed to punish businesses and was good for householders. Now, that's going to be reversed by the looks of it, and I think that's an important conversation. We'll speak to one of the people who was involved in the court case that led to this finding. I was interested to see in News 24 a report by Carol Payton, who I rate very highly, as you know, that Enoch Godongwana, the finance minister, says he wants a truce in the sort of NHI battle. There are, I think it's 9 court battles now relating to the NHI. He's looking for a truce on that. Good. We obviously need such a thing. I don't know, though, how you would sort of negotiate it, who you would negotiate it with. We know the health minister, Dr. Aaron Motsoaledi, really wants an NHI. So how do you negotiate that? And that's really going to be difficult. Craig Comrie, the CEO of the ProfMed medical scheme, we'll speak to him about that. And then also mining, the Minerals Council, saying that, yes, they're making lots of money at the moment. We know that their record prices for gold, platinum's on a tear. But there are still real issues around the way in which the price of mining and costs for the mining industry are going up. And this sort of mining boom won't be with us forever. This would be the good moment to reform, I would say. Good to hear from you tonight. 011 883 0702 021 446 0567. Are you weeping tears for the jobs lost at British American Tobacco? Are they crocodile tears? You don't mean it seriously because this is a tobacco company. How do we deal with the illicit tobacco economy? Please, your thoughts. 072 702 1702. And how is it that the tobacco economy, the illicit, the illegal economy, has managed to get so big? I mean, who do you blame for that and how do we fix it? 12 minutes after 6.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, first this morning a report in Business Day and then confirmation from British American Tobacco themselves that they've decided to shut down their last cigarette factory in South Africa. They say 230 jobs will be lost. Johnny Moloto is the head of corporate affairs for BAT Sub-Saharan Africa. Johnny, good evening and thanks for your time. You say you're shutting down your factory because of the illicit economy. What impact is the illicit cigarette economy, the industry, having on your business?
Thank you very much and good evening, Steve, and your listeners. The impact really has been, as you correctly pointed out, there are potentially 230 jobs at risk. We announced yesterday that we will be ceasing local production. but we will continue through an import model. So to be quite clear, we remain present and committed to South Africa, and should the situation substantially change, we will definitely reinvest in local production. But what that does mean is that where we are today is that over the last 10 years, we've tried the best to hang on, to not come to this painful decision. But the reality is that we are only operating at just 35% of total capacity at the factory, which is a massive facility. Just to give you the scale, that factory could produce the total size of the tobacco industry in South Africa. So that's how big it is. So if you are operating at just 35% of your total capacity, it means all the efficiency measures that we've implemented have now come to the point where, we've reached the limit of how much further you can try to implement efficiencies. But the sad issue is that economy in Heidelberg, we've been there for over 50 years, and that's where, between ourselves and a second manufacturer, have been the biggest contributors to the local economy, as well as to the fiscus in the municipality from a revenue generation point of view. And we've also reached out to the mayor yesterday to convey our decision as a courtesy, seeing as, he has been also at the forefront of trying to engage with other spheres of government and law enforcement authorities to help him in making sure that factory remains viable.
Your sales volumes, how have they declined then? Because you produce these cigarettes to sell. What kind of percentage change are we looking at from, say, before the pandemic, and where you are now in terms of the volumes that you sell that are legal cigarettes?
Yes, Stephen, out of respect to you and the listeners, let me also start with a disclaimer that we are in a closed period. I will share with you, though, that between 2019 and 2021, so we lost about 40% of our volume. So that is the information that is public that I can share. And since then, we've seen further declines, which has led us to the point where we are now. But the 40% decline itself was quite significant, and also over the years has also involved the reduction of headcount over the years.
Okay, so from the pandemic, your volumes never recovered?
They never recovered, yeah. In fact, it accelerated from the pandemic because we had started seeing some green shoots when from 2018 to 2019, and as well as when the new commissioner of SARS joined, we were sitting somewhere around 41%. That's where the illicit industry was. But fast forward post-COVID, that just spiked, and it continues year on year. Yeah.
You've been calling on government to deal with the illicit cigarette industry. SARS has been trying to increase its enforcement. Is any of that having any impact that you can see?
Look, Stephen, the biggest problem with the illicit industry is that 80% of it is locally produced, is local manufacturing, which we have, rather than just complaining to the government, but we've also proffered, solutions like placement of customs officers at factories. If you look at places like Nigeria, for example, they have them permanently in their factories, and you have almost 0% illicit. And this is some of the things that had led to that slight decline in 2019. And this is something that we said to SARS, these are low-hanging fruit. But we've also called upon the Minister of Finance to say that the above inflation increases that we've seen year on year, where you are only controlling only 25% of the market, doesn't make sense because you widen the gap over so much. Given the stretch to the consumer, it's only natural that they will gravitate towards the cheaper option. And as we know, this is a sin product, which is not necessarily meant to be easily accessible. But, the consumer now can access it for as cheap as 10 rand. So those are the concerns that we've raised. And we have had some commitments where we saw the minister allocating budget last year towards tackling this problem. We've seen the commissioner made some very, very strong commitments and statements. We've seen the Border Management Authority also coming to the party. However, this still requires a whole of government approach and a sustainable approach. And if I may even add to say that, to go after the big fish. Because at the moment you are tinkering around the edges where you're just disrupting the retail sector and also just capturing here and there a player, but not really the main players behind the illicit industry.
Johnny Moloto, thank you, the Head of Corporate Affairs for BAT Sub-Saharan Africa. Very difficult news for people in Heidelberg tonight.
7:02.
7:02.
Stephen is on The Money Show.
6 to 8 p.m.
18 after 6, a court ruling overnight in which a judge ordered the energy regulator Nersa to recalculate the electricity prices that you pay in Joburg, Ekurhuleni, Madibeng and Umsunduzi after several businesses and one business group said the tariffs were discriminating against them. So what that means is it is possible that once the tariffs have been recalculated, households who've already paid too little for their electricity might have to pay more to make up the difference. Some of the companies would have paid too much. They might have to be reimbursed in some way. Melanie Veness is the CEO of the Pietermaritzburg and Midlands Chamber of Business. They were involved in this court action on behalf of enterprises and businesses in the Umsunduzi area. They went against the Umsunduzi municipality. Melanie, good evening. Thanks for your time. Why did you bring this application? What was happening to your members that you thought was unfair?
Well, several years ago, in fact, in 2022, we supported some court action against the regulator to challenge the methodology that they employ to determine municipal tariffs, because by law, municipalities are permitted to recover their efficiently incurred cost of supply and a small return on assets, and it has to be calculated per customer category. So municipalities have to submit that cost of supply to get an increase. And in our case, our municipality were granted a 15% increase across tariff categories without having looked at the real data per category. And in our case, industrial members appear to be subsidizing other tariff categories. And so that is basically, it's both unfair and bad for our economy, because they're our big employers, and that's just not acceptable. Our economy can't grow, and our manufacturers can't compete if they're not getting a secure quality supply of electricity at a competitive rate.
So the cost of supply issue is something that I think it was sort of in a way you've been ruled upon perhaps in your case earlier, because it is true that municipalities had not been submitting that, Nersa had not been considering that. But at the same time, did Nersa consult you? Because isn't that something they're also supposed to do? So did they make it clear to your members they would be paying more than other people for their power?
No, absolutely not. There is a consultation process, both with the municipality when they determine draft tariffs. We asked for them to share the cost of supply with us, and they refused. We then asked the energy regulator, and they're also compelled to consult with us to share the municipality's cost of supply study so we could engage meaningfully on it, and they too refused. And so they determined the tariff in the absence of making that information available. So we really had no choice but to take this action.
What's your understanding of what happens now? The tariffs will have to be recalculated. I presume the municipalities would have to include a cost of supply. I have to say, Melanie, and I'm sorry to say this, I don't know if all of the municipalities will actually be able to do that.
No, so in our case, our municipality did submit a cost of supply study. Unfortunately, in our view, it was a flawed cost of supply. They've got 10 days from the order made by the court to resubmit their application. I would imagine that they are not going to find much joy unless they review the cost of supply study and put an amended one in that looks at every customer category and then makes application on that basis. We'll then have the opportunity to interrogate that cost of supply and to make our comments and run a proper process. It's exactly what should have happened when the tariffs were first proposed and considered by Nersa.
There's still a few things that have to happen here, but is it possible that households that ended up with paying less for electricity than they should have because you were paying more, that somehow that money might have to be made up?
Look, I think that it's going to be very, very important for all sectors of society to engage with this cost of supply. If you look at the municipalities' domestic tariffs, they are much higher than the domestic tariffs of Eskom, and essentially they're supplying, they're giving the same service. So I can't see how the current tariffs that they're paying won't be sufficient to cover the cost for their category. So it will be important for all sectors of society to engage with that cost of supply and to ensure that we get fair, cost-reflective tariffs in every customer category.
Melanie Veness, thank you so much. CEO of the Pietermaritzburg and Midlands Chamber of Commerce. Listening to that, Matthew Cruise, the energy expert at IMPOWER. Matthew, good evening. I mean, once again, Nersa has egg on its face. It must be losing credibility as a regulator.
Hello, good evening, and thanks for having me. So yes, unfortunately, that is the case now. This is now following the mistake that they made, the 54 billion rand mistake that was agreed with Eskom, and now that's back in the High Court as well. So there's a lot of egg going on in this space, and this is we shouldn't forget that this is actually something that occurs pretty much every single time that there's a multi-year price determination from Eskom, where they ask for like a ridiculous 50% increase, or last time 36% increase, and then Nersa says, no, you're not going to get that increase, you're going to get a lower one. Don't worry, public, it's going to be initially short-term pain for long-term gain. The first year is going to be only half of what Eskom applied for. In our case, last year, 12.74% increase. But then this year, we were hoping to get a 5.36% increase. But now it looks like it might be even a 10.5% increase. So it is unfortunate that nurses going through this situation at a time when we would hope that they would be showing a lot of competence and excellence in the space, because they need to be playing a key role in the unbundling of Eskom to ensure that efficient cost of supply that was mentioned is actually correct and being awarded without Eskom, as they term it, receiving undue compensation. So I've got a big problem with the whole way that this cost of supply is approached, because if you think about it, if you're a company and you're told, oh no, you can replenish any cost that you have with a small margin, you would just inflate your costs and find ways of reflecting more costs. And this has been seen with Eskom. And from my time at Eskom and understanding how it goes with municipalities, they unfortunately view the revenue collected from electricity as revenue that they can spend on anything. So they use it for water infrastructure, they use it for their homes, their houses, their cars, things like that, the fruitless and wasteful expenditure that we hear about. It's the revenue from electricity. So then if that's the case, are they really providing are they really accounting for the costs that they're using to supply electricity? I don't think so. So I'm hoping for a whole review of the way that the cost of electricity is actually determined in South Africa.
Well, I was going to say, I mean, if ever there was a moment for a sort of big bang reform approach, something that really changes it, this would be now. The system is kind of creaking, and the electricity environment has changed so much in the last 10 years. I know there's a review of the tariff structure. I think Sanedi is in charge of that. That'll take some time. What people really want, of course, is cheaper power.
Yes, that's been on the cards for the last 10 years, with the government saying that, all this green electricity that's coming online is going to bring down the cost of electricity, but that's not actually been a reality. So what is exciting is that when this unbundled state of Eskom finally comes into fruition and we have a democratized energy sector, it won't be within Eskom's ability to be like, this is now the price of electricity for everyone. They will be a bidder in the market, no longer a determiner of the cost of electricity. So what will happen is the other independent power producers that are able to provide electricity from solar farms paired with batteries and wind farms paired with batteries, that electricity typically costs half of what Eskom's currently charging. They will bid their electricity on the market, and then all of the less expensive renewable energy will be purchased first, and then Eskom will be able to receive their price. So that'll start driving down the price of electricity. But I see that only happening in about 3 to 5 years, unfortunately.
Matthew Cruise, thank you. Energy expert at IMPOWER, 27 after 6.
The Money Show.
The markets.
Viv Govender is portfolio manager at Rand Swiss. How's it, Viv? A tough day for Richmond, even though the earnings weren't that bad, I thought.
Yeah, no, I mean, look, the thing is that in constant currency, the earnings looked quite nice. I mean, double-digit improvement. Unfortunately, if you put in the actual number in, it's not as positive. I think only up about 4% or so. Also, you must take into account the fact of the last, say 6 months or so, this company is up quite nicely from lows itself, basically around about August last year till now. It's up about 23% from lows in August.
In the US, suddenly it looks like there was a tough day for their stock exchanges yesterday, but suddenly TSMC, the chip maker, clearly had a blockbuster quarter. I mean, suddenly it looks like the AI rally could be back.
TSMC is going to be seeing something in the region of about, I think, 30% growth in their earnings here, on the revenue, sorry. I do think that, the fear around what's been happening with regards to, it's such a profit up 35%. What the fear what's been happening with the AI sector at the moment is there's almost an underlying fear that it's run so much, there must be a bubble. And we've seen companies like, TSMC is like past the $1 trillion mark. We see ASML past the $500 billion mark, not to mention the NVIDIAs and the Googles of the world past $4 trillion. These numbers are so large that, unless we see incredible results coming through, the market is going to be disappointed. Fortunately, however, TSMC has delivered these incredible results.
Brent crude went to, I think it was $66 yesterday. It's pulled back a little bit. And obviously the situation in Iran, I presume, is what's driving that. But fundamentally, oil still seems to be in a kind of strong supply phase.
Yeah, look, the fact that oil is hovering around the $60 a barrel level, it definitely shows that it's the buyer that's controlling the market more, not the seller. If you look at what OPEC wants, what the shale producers in the US wants, other places, the big piece of oil wants, they don't want it at $60 a barrel. They want it closer to like the $80, maybe even above that level. A lot of their budgets work only above $80 a barrel. Unfortunately for them, that the oil price right now is not cooperating, and we have seen oil, pretty much since about 2022, come down quite sharply. It's down about 44%, 45% since 2022 till now. With regards to what's happening in Iran, look, this is great news. Not just from the point of view that we in South Africa are not going to be obviously paying higher amounts for our petrol, but the fact of the matter is that the reason that it's coming down is because there seems to be less willingness apparently among the US to do something too violent in Iran at the moment, which is obviously from a humanitarian point of view, considering what happened to Iraq, what happened to Syria, and other places that are living in the Middle East, a good thing.
Yeah. And then there's been, and I'm sure it's going to be a political issue in the US, the strength of that economy. I mean, the Trump administration says it's, the best it's ever been, etc. It's going into earnings season there now. Is it possible to know what we're currently going to see? I mean, it's going to really tell us what's actually going on.
Yeah, look, if you look at the US forecast for growth in their fourth quarter, it is surprisingly high for these forecasts being pushed through. Remember, we could be seeing, I think the number is sitting like close to like 4+% at the moment in terms of forecasts of what to expect in fourth quarter growth in the US. Obviously, there was, movements in terms of things like, for instance, the shutdown, etc. But a 4+% growth rate in the US is an astounding number. Considering the fact that the EU last year didn't even grow by 1.5%. You know what I mean? The US right now, you can say Trump is probably more to do with things like the AI, infrastructure boom that's happening and other factors. But the US is by far the strongest large economy in the world, even compared to a place like China.
Viv Govender, thanks very much indeed. Portfolio manager at Rand Swiss. Do appreciate it. Yeah, interesting to see how it's all playing out there. You're with The Money Show just after 6:30.
WhatsApp Stephen
on 072
702
1702.
A couple of messages coming through tonight about Nersa and the way in which it sort of managed all of this. I have to say, what I keep coming back to is, and I have to sort of say that I kind of agree, I think, with the expert we spoke to and just what, he was saying about the problems that we have, Matthew Cruise, that it's just got too complicated, too technical. The system is too old. The system has changed. Everything has changed around it. It just doesn't sort of work anymore. And I don't know how he sort of, fix all of that. And Tumba's saying today that the energy expert from IMPOWER is misinformed. Eskom does not set the electricity price. The price is set by the regulator Nersa. It's dishonest to claim that Eskom sets its own price. I don't think that's what he was saying in Tumba, I'm afraid. I think what he was saying is that Eskom still has a cost to produce electricity. So I don't think Eskom was, he was saying Eskom sets its price at all. But the cost of coal, Eskom would know. The cost of labor, Eskom would know. And it submits all of that to Nersa, and things go from there. Don't forget, we'll talk about the NHI in a moment. Is it possible that there could be some kind of truce? One would hope.
The Money Show.
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
14 minutes now to 7 the time. Well, a report from News 24's Carol Payton today saying the Finance Minister, Enoch Godongwana, now wants some kind of negotiation to resolve what have become 9 separate court cases that have been brought against government's implementation of the NHI. And you'll know the Health Ministry and the current Health Minister, Dr. Aaron Motsoaledi, have been adamant they want to go ahead with its implementation, but private healthcare funders, healthcare providers, doctors, they've all launched cases against it. Craig Comrie is one of those involved in one of the cases against it. He's the CEO of the ProfMed medical scheme. Craig, good evening. Are you open to some kind of negotiation with government over this?
Evening, Stephen. Absolutely. We always wanted to sit around a table and discuss and avoid the legal and protracted legal cases that are out there. So throughout the consultation processes, there was lots of submissions from both the funding associations and also the provider associations of the doctors, indicating their preference for alternatives which are far more realistic in terms of achieving improvement in terms of universal healthcare coverage. And so we welcome the minister's pronouncements on opening up, and hopefully an invitation will follow to have those discussions.
Do you think that let me put it like this, are you optimistic you would be able to find common ground with government? It can look, and I mean court cases do this, it makes it look like you're very far apart. Do you think you're as far apart as it sometimes looks?
I think there are a few very key parts of the National Health Insurance Act where if there aren't any concessions made from a government perspective, I don't see anybody in the private sector changing their views. And some of them affect the constitutionality around how you would fund healthcare, the role of medical schemes specifically. We find in a lot of universal healthcare systems or national health systems that private healthcare plays a small but important role in providing funding for healthcare. What we have to do is do it in a framework that improves the equity that we see, or the inequities we see in the health system currently.
One of the things that strikes me is it looks like government's a little divided. So for a long time, the Health Ministry and the Health Minister, whoever it was at the time, has supported the NHI, and this current minister is strongly in favour of it. The Treasury has always sort of demurred, gone the other way, or never come out and said we don't support it, but certainly on the issue of the medical aid tax credit, refused to sort of remove that, which to my mind suggests they're not that keen. Could divisions in government make this a little difficult because you will need a negotiating partner? They will also need one, by the way, from you.
Yeah, I think the best ally so far throughout the ministries is certainly Minister Godongwana. And I always say when you are going to change a system and build something new, the guys that hold the purse strings are probably amongst the most important people you need to bring along. And I think there's a realization after all the health consultative processes and even the legal cases that the amount of money that there is available is just not possible to do what I guess was promised in the National Health Insurance Act when it was signed in. And so I think what we have to do is not just get the Minister of Health around the table. I think he has very clear views on what he wants to do, but it would help to have both of them in the room and talk about the realism around the need to improve healthcare in the country.
I mean, I must say, I worry, Craig, and I have reported on politics for a little while. I worry that this will just become a political football. Whatever you and whatever Enoch Godongwana do, there are always going to be voices on both sides, one very much against and one very much for. And do you worry that noise, local election this year, do you think that noise might actually make it quite hard to do a deal?
Yeah, I think when the National Health Insurance Act was signed in, it was straight before the last set of elections. So between the 4 and the 2 year type of breaks in the politics, we see some reasoning coming through, or some reasonable views coming through and being pronounced now. I do think it will distract from proper negotiations, and hopefully people can see past the politics and we can get to something that's far more practical and implementable. But what we have to do is get to a changed healthcare system that does deliver better healthcare.
I suppose the other issue is how long all of this takes, and a negotiation could go on literally for 5 to 10 years, because it is such a big, complex thing that people are trying to do. You're trying to create a system of universal healthcare in the most unequal country on earth. That, by its very nature, is very difficult.
Absolutely. But I think things like the court challenges that are currently in play could also draw out in a similar vein over many years without anybody moving. And I think the risk there is that the health system needs to change now. It can't wait 5 or 10 years. The private sector is particularly expensive in terms of getting medical scheme coverage. That needs to change and become more affordable. And so some of the enabling legislation or the regulations that have sat on the back burner are things like low-income medical schemes, which in fact could relieve more of the health burden from the state financing requirements. And so we just don't see any of the other important pieces of reforms happening with a focus on we just want to get NHI in place, and I think that's going to be problematic.
Craig Comrie, thanks very much indeed. Do appreciate it. The CEO of the ProfMed Medical Scheme. Okay, so the door's open there for negotiations. I am not convinced, I'm afraid, that the health minister is going to be that easy to convince to get to the table. On the other hand, if government is serious about some kind of truce, this would be the moment to make that happen.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
5 minutes now to 7 the time. Well, the Minerals Council saying that despite the fact gold's at record highs, platinum is doing so well at the moment, mining costs are still rising very quickly. And of course, once this boom is over, the costs will remain. They say power prices are up by 16% year on year. Water's up nearly 12%. Labour costs are up by 6%. Andre Lawrence is the economist at the Minerals Council South Africa. Andre, good evening. What impact are power and water prices having on our miners? They're going up really quite steeply.
Hi, Stephen. Thanks for having me. I think everyone knows that electricity and water are quite essential for mining operations. You can't run a mine without them. You can't switch the power off. You definitely can't operate without water. So I think, the essential nature of these services are not in doubt. The Reserve Bank also, they flagged administered prices, which would include electricity and water, how fast these are rising. Now, for mining, oftentimes what you'll see is that these items are increasing by around 3 times the rate of inflation. So even if our members, the mining industry, budget for 3 times the rate of CPI increases in water and electricity, it still isn't enough. So essentially what this is doing is eroding our competitiveness. So it's particularly in South Africa, that is a big concern, something that we're actively sort of working on. Of course, the fact that load shedding has abated is now being offset by the fact that electricity is so expensive. So overall, it's not good for profitability.
We know that many of your members are now producing their own power where they can, and they started that during load shedding. But the economic case now for, any business, but particularly a mine to produce its own power and to get away from Eskom, the economic case must be very strong now.
Yeah, exactly. So, during the height of load shedding, the reason for shifting towards renewables and self-generation was quite evident, right? We didn't have electricity, the sector needed it, so investing in renewables particularly was the case made itself. That has since been sorted. I think everyone's quite happy about that. But now, like I said, we sit with the problem of very high electricity prices. So basically what that does is it still incentivizes the mining sector to continue to invest in cheaper renewables, just to offset the expensive power that we're getting from Eskom. And of course, there is also this third driver that we don't often talk about, but there is the shift towards renewable power because it, helps us offset some of the carbon taxes. We talk about the border adjustment mechanism that the EU is imposing in the UK, for example. So there are also benefits of having renewable power from a sort of tax and environmental perspective. But no doubt, the price is just sort of hastening the shift towards renewables.
The problem is that to bring, Eskom, as we know, Andreas already discussed on this program today, has all sorts of problems in terms of bringing the price down. Water, also quite difficult to bring down. These are hard things to change. So, you might hope for reform, and yes, there's a tariff reform process underway, but I don't really see it, I'm afraid, certainly in the short term, leading to cheaper electricity or cheaper water for you.
Yeah, it's a very valid point, and that's also why we've said, we need to see longer-term, more sustained reform. But you're absolutely right. No solution will, bring us cheaper prices within the next 2 years even, right? So it's definitely, something that unless we embark on some sort of radical sort of structural change. And when you think about water, what we need there is massive amounts of capital expenditure on infrastructure, for example. These things take time. But I think you can make the case that if we don't start now, we're not going to solve this problem even in 2 years. So I think it's still imperative that we do that, the reforms and act with earnest today.
In a strange way, this is the moment, isn't it? Because yes, you're making your members are making nice profits from platinum and gold, but this gives everyone a bit of space to do some reform, and we need to do it before this current boom comes to an end, and it won't last forever.
Yeah, it's also difficult because, and I think, it's well known to the listeners as well, you have the municipal problem, right? So sorting out electricity and water at municipal level is also a challenge in and of itself. So let's say, for argument's sake, even during these booms, when we have money, you still have the problem at municipal level. And of course, not all the money is ring-fenced. So, for example, the mining industry during these booms, we are expecting to pay more in terms of royalties and corporate income tax, but that goes to the fiscus. They don't ring-fence any of that. So there's no guarantee to say that will be directed, that windfall will be directed towards water or electricity, for example.
Andre Lawrence, thanks very much indeed, economist at the Minerals Council South Africa at 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Lots to come in the next little while. 8 minutes after 7 the time. We'll speak to Siphumelele Zondi in just a moment. Tech addiction. You ever try to take a screen from a young child? Try to take your phone back. What happens? You ever done it? Hey, the tantrum. You sometimes have to give them sugar to get the screen back, and that doesn't last. But why is it happening, and how do you deal with it? It's such a tough thing. We'll speak to Siphumelele about that in just a moment. Small business focus tonight. How you access new markets at the start of the year. Somkroba Vuba will be with you. And then how you actually beat the market. Investment School, the focus of Investment School tonight. It's what the purpose of the Money Show really is, I suppose, to help you understand and make more money. But how to beat the market when everyone is trying to do the same thing. We'll speak to Dr. Musamal Wandla and Khelo Geyose. Looking forward to that conversation tonight. Good to hear from you. 011 883 0702 021 446 0567. And of course, voice notes on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM, streaming on the Prime Media Plus app
and DSTV channel 856.
Well, you would have seen today the news that Dion George, the former Environmental Affairs Minister, has resigned from the Democratic Alliance, and he's clearly furious at how he's been treated. The DA saying they would rather he had gone through a sort of formal process first because there was a sort of disciplinary investigation underway. I am not convinced at this stage that the story around Deon George and the DA leader John Steenhuisen is over. George was also the federal finance chair of the party, and his claim is that Steenhuisen essentially used the DA credit card for private purposes. You remember the Sunday Times headline that it was being used for Uber Eats and things like that. The DA says they had an investigation, that everything's been reconciled, and it's fine. The problem is that in just about every corporate I can think of, if you use a corporate credit card for personal items and you get found out, you are in big trouble. And one way of sort of understanding this is that Deon George was sort of the chief financial officer of the DA, and John Steenhuisen is sort of the CEO, and the chief financial officer has left saying that the CEO was misusing the company credit card. And paying it back is kind of not good enough in most corporates that I can understand. You have to do more than that, and often people are fired. You hear about it from time to time. So I'm not convinced this is all over at this point. And let me put it like this. The DA's big campaigning point, what they claim makes them different from everyone else. This is their argument, not mine. But their argument is that they are clean of corruption. And by and large, I think you could say, objectively speaking, that that's true. This sullies that because it's about the misuse of money. Now, John Steenhuisen might well argue, and I don't know the full facts, and I must just make that clear. We don't know what the payments were. We don't know how many they were. We don't know what the circumstances were. Maybe he was able to explain it away. I am not convinced that this thing is over. I suspect it's going to come back. And Deon George, in a very sort of public resignation, and if you look at his letter, his resignation letter, it's very pointed and it's been published in many places, but it's very personal. That might weaken part of his argument that it's so personal. The fact is, I think there's going to be a sting in this tale that is still to come.
The Money Show, Tech Thursday.
Well, new evidence, this time from the research firm Swinburne, saying that parents are the reason that so many primary school children are actually addicted to tech, to their screens, and that 63% of children spend more time on social media than the recommended guidelines. Comes in a journal called Human Behavior and Emerging Technologies. That's a journal we should all sign up to. Siphumelele Zondi is our tech expert. Siphumelele, how's it? I mean, what kind of tech are children addicted to? And, from a very young age, you can see children who just refuse to give the screen back.
Hello, Stephen, and yes. So they're interested largely in gaming and social media. And these are primary school going children. And you think that a lot of, especially social media companies, would say that they don't allow children, including, by the way, games development companies, where you'd find that with a lot of video games because of issues like addiction, but also what children could be exposed to when they're playing video games. They'd also say that they have age restrictions. But what these researchers have found is that children actually are addicted to largely video gaming and social media, and therefore they do have a tech addiction.
There's a study from the John Kopping University in Sweden. They say their real concern is an addiction to video games. Now, from a young age, I played games a little bit, but I'm not that interested. I know plenty of people who are. And I get that can be an addiction. But I would think that social media, particularly for teenage girls, actually can be far worse an addiction than video games. But they say video games is the thing.
Totally. And also when you think about how we often speak about a gamification of almost everything, like this gamification of education, and there are suggestions that maybe children would be interested more in education if they are doing it through a video game of sorts. But yes, maybe they might learn more, they might learn better, they might register concepts better if they're playing games. But now there's this issue that's being highlighted. You just mentioned another report, apart from the initial reports that is broadly on social media. And again, this report from the university in Sweden is also highlighting the issue of video games as well, whereas we think that if you play video games, you can do it even in spaces like education or even learning. Sometimes they say you learn new languages better if you are doing it through something that looks like a video game with characters that children could identify with. But it does pose a danger.
there's other research that says parents can be addicted to their smartwatch. Now, I mean, maybe my watch is a bit doff, but apart from exercise, I don't know what else I would look at on it, frankly.
Well, that's a huge chunk of it, and that's why people are wearing smartwatches. But what you also find is that your smartwatch is connected to your mobile phone, so it's not like you are moving away from a mobile phone when you put on the smartwatch, because when you receive a message, it comes through your watch. You're going to look at it. Certain apps come through your watch as well, and also sometimes you feel that you have these targets that you must meet. And also because you're wearing this watch, it's like, oh, I need to run, or I can't run without this watch, or I can't go on a hike without this watch. And you find that you're constantly now checking it, and you constantly now feel like you need to meet certain targets because there's this watch that keeps on telling you that your target is this. And that's why people, there's this caution that psychologists are also making to say, well, your smartwatch could be problematic too, because it's different from the ordinary watch. There's a lot of stuff that's happening in it, and you might find that you spend a lot of time looking at it, and sometimes you've even created things to do because the watch says, listen, there's this thing that you now need to do in order for you to achieve that.
These things, we're supposed to be in charge of them, and yet more and more they become in charge of us. I mean, if you look at how much time people spend on TikTok, for example, just flicking, you say to them, come, get off. They find it really hard to do. I find that on YouTube, Siphumelele, and there's a reason I whispered that. How do we make sure that we get control back? And if you give us a proper answer to this, I'm going to nominate you for a Nobel Prize of some kind because it's so blinking difficult.
Well, with children, I suppose it's parents monitoring it. And sometimes actually you'd find that parents would say that a device is a good babysitter. It's not. Because a child is going to end up not wanting to move away from devices because you treated it as a babysitter of sorts. And so with children, it's parents monitoring it, and parents sort of like creating a timetable or a schedule of sorts where a child can move from one activity to the next that also moves them away from the screen. Because what you sometimes find happening is that they might move away from the smartphone, and then they're suddenly looking at the big screen on the wall. They could be looking at YouTube on the big screen on the wall. When they switch that off, they're moving to the next technology. Or maybe they've connected a device to headphones. You think they don't have the device in front of them, but the headphones are still on. And that's all technology. And you find that they can't have a life away from technology. So it's parents need to create some sort of schedule where they need to create activities in the real world that children can be a part of, or even read a book or some education that moves away from technology. Now we are also then finding out that adults as well are now falling prey to this in terms of them being addicted to this, because if it doesn't happen, these addictions, I remember speaking to a 16-year-old who said he ended up having to go to rehab because his addiction was to that extent that he could not move away from a device of any sort. And so parents needed to intervene, take him to rehab where he could learn how to move away from digital devices or any form of technology from time to time.
Or you could just organize a get-together with some friends, sit around a table, leave the devices somewhere else, and you'll come away feeling happier, refreshed, and having broken your addiction.
And maybe not even recording the stuff, because that's also a part of it where you find that activities need to be recorded. And so you still are on the device recording what's happening offline.
Siphumelele Zondi, thank you so much to talk about, our tech expert. And something that I do sometimes if I'm with a group of friends, there'll be an argument about something. And I'll say, no one's allowed to Google the answer. It's much more fun to continue to have the argument and let the conversation go as it normally would have. You can Google it tomorrow, for goodness sake, and then tell me I was right. 19 minutes after 7.
The Money Show. Small business focus.
Songqobo Vube, the entrepreneur and business strategist, with us now. Songqobo, good evening. Happy New Year. We're still in the compliments season. We're talking about how to access new markets, and particularly at the start of the year. And it can actually be quite a daunting thing. You might be running a small stall in one area. You go 2 blocks away. You need to access that market too.
Correct. And I love how simple an example you use, because normally when we talk to like small businesses and we talk about growing market access, they're like, okay, I need to go to another province. I need to go to another country. I need to go to another continent. And actually, like you say, it's just expanding the business. And I think also it's one of those terms that people kind of try and confuse others with. But at the end of the day, what is market access? Market access is purely your ability as a business to put your product in front of the customer that is likely to pay money for that product. And it's super important for SMEs because at the end of the day, that's what we're all about, serving that customer. And if one is unable to do that, it does very much put a cap on how far your business can grow. Yeah, absolutely. I mean, people look for what they call market access opportunities. I don't even know what that is. If it slapped me in the face, I'd probably sort of, be a bit confused. So I think it does smack a few people in the face, actually. I think, and I ironically and unfortunately sometimes, is that I speak to a lot of entrepreneurs and founders who say that they've gone onto a program because the program promised market access. Yeah. Often people think that the outcome of those programs, often enterprise supply development programs, is going to be that corporate gives you a contract. And therefore, when you're now being put through a program, i.e. training and skills development and upliftment, you're like, hey, listen, stop wasting my time. Just give me the contract. So I think it's important for people to be more discerning about what does it mean. And I think if we break it down, there's often steps or things that you need to have ticked the boxes on in order for you to expand from a market access perspective. Sometimes there's regulatory stuff, as in you have to be a registered company with CIPC. You've got to be in good standing with SARS. For some businesses, you've got to have some sort of ISO accreditation or some sort of insurance in place for public liability. And that's key because that's kind of the door opener. And then beyond that, you've got to be very, very clear on what channels you're using to reach your customer. Whether you're selling a product or a service, it's how do you reach that customer to have that critical moment where your product or service is right in front of a customer and the outcome is a sale. Do you have to make sure that your sort of home market, the block where you started, is nailed down first? I've seen different success case studies. Some completely fall apart when the first one wasn't nailed down. And some actually continue to thrive, and now there's 2 thriving places. I think the differentiator is about the consistency, the diligence that goes into even that first location that you set up. So if you're going to walk away, especially if you're a founder and CEO, walk away to put all new focus on a new area of development and expansion, you need to know that you've left behind a rock solid structure, team, processes, systems that allow that business to continue. And I think that's really the differentiator rather than should we have gone for the second location. It's more a question of, were we ready to go to the second location? What do you need sort of in place before you go and walk around the corner to the next block? What do you need to make sure that you have sort of ready? So I think you've got to be transitioning. So I find oftentimes when we start a business, we're gung-ho, we're a party of one at the beginning, and the founder's a hustler extraordinaire, and they land all the sales. Every customer probably knows you, or you've had an interaction with them at the beginning. And then you quickly start moving towards a place where that can no longer be the way that things function without you burning out, right? And therefore you start to expand your operations, you expand your team, and you very much need to start developing systems, procedures to be in place that allow you not to be there. I always say to a founder, if you set up a business and you can't even go on holiday, you haven't really set up a business. You've set up a prison for yourself. And the question becomes, if you've ticked those things, are you then able to put hands off the table and off the wheel and things run as they should? There'll be mistakes, there'll be mishaps, but it shouldn't be anything catastrophic. And then you kind of are ready to move into the next environment. So, and what that would mean mean is you've got to be clear on what is your growth path. Where are you expanding locally? Are you expanding from a channel perspective? You used to do face-to-face brick and mortar stores. Now you want to do e-commerce, or you've been doing e-commerce. You want to do brick and mortar, which we've seen a couple of those kind of go belly up as well. You've got to be clear, what is that growth strategy? Is it replicate more of the same, or is it replicate and grow with a slight tweak on what you've been doing?
Are there particular avenues you can use to access new markets to sort of grow your business?
So I think there are, depending on obviously the type of business and the industry, but I think some of the key things that one would need to do is effectively, number one, I think people always underestimate the power of following their customer and referrals. So at the end of the day, if you're growing your business, you're trying to clone your customers, which means you've got to know them so well that you know where others that look like them are. Obviously, if you're a B2B business, or, you're trying to get more business and corporate clients. And I think the other one for direct to consumer businesses is if you're trying to grow and expand market access, partnerships becomes a key element, because instead of chasing one by one consumer, you start to find solutions where you can partner with another business and they give you access to thousands or millions of customers that actually come into the world of your service or product offering.
Just because you're going to the next block doesn't mean you can't do it in the same way a multinational would and find a local partner.
Correct. 100% correct. Yeah. And I think that's really the challenge, right? We've got to keep growing. And, beginning of the year, everyone's like, new year, new me. And I guess from a business perspective, we really need to ask ourselves what the equivalent of new me is for your small business in order for you to continue to remain competitive.
Song Koba, good to see you. Thanks so much. Song Koba is the entrepreneur and business strategist.
The Money Show.
Investment School.
Tonight on Investment School, we're discussing what I suppose we should discuss on Investment School every week, which is how to beat the market. Beating the market versus riding the market. What works? I suppose, to put it another way, how do you make more money than the other guy when the other guy is trying to do exactly what you're trying to do? We're lucky enough to have in our studio tonight Clelo Giyose, the Chief Investment Officer and Principal at First Avenue Investment Management, and Dr. Musa Malwandla, the co-CIO of Differential Capital. He looks at alternative investments. Gentlemen, thanks so much. I really appreciate you coming in. Clelo, let's start with you. And I suppose we need to ask a question about what is market efficiency. You're trying to compete against everyone else.
Right.
Where do you even begin? Because it's if it was easy, AI would be doing it.
Well, it is actually, to some people, there's a school of thought that says it's that easy because share prices, market prices, as you see the stock price of Pick and Pay and Woolworths and ABSA, there's a school of thought that says those are very efficient, right? They are reflecting the true value of the underlying company, that they're never wrong, right? There's a school of thought that says that, and that's called passive investing, right? So if you buy the Cetrix 40 or any other kind of index and you pay 15, 20 basis points, it's about as cheap as that, and you basically ride that for a lifetime, you're not beating the index at that point. You are riding the index. And the big reason why people want to do that is that it's very hard to beat the index, number one. Number two is the index actually is probably the best wealth creating vehicle in the country, not just in the country, in the world, right? So it's not shabby to ride an index. You're riding a tiger. Try to beat the tiger.
So, Musa, I mean, there are different levels of efficiency, and there are some things that some markets might miss. And the obvious South African example is people who bought Capitec when it listed. The US example would be people who bought some of the tech shares when they listed. So there are things markets miss.
Sure, yeah. So there are actually three groups of things that, theorists, so people who think about markets all the time from a theoretical perspective. It's either they are missing price patterns. In other words, there's information in the prices themselves that if exploited. So in other words, if you model these prices properly, you can predict what's likely to happen to a particular company. And then there are those who believe that it's public information about the company, so the fundamentals, the financial statements, that contains information that's often missed. And then there are those who believe that it's non-public information, so information that's only available to insider. That's the only thing that's missed by markets. So now, depending on what you believe, you can then formulate an investment strategy. Now, suppose you believe that markets miss price patterns, right? So that there's patterns in the data itself that can be exploited. One of the approaches you can then use is something called chartism or trend following or momentum. So price momentum, for instance, is one of the simplest strategies is you buy what worked yesterday. In other words, what worked yesterday is likely for you to work tomorrow and the day after and the day after. Now, the problem with that is if it were that simple, somebody probably would have done it already. If you had an Excel spreadsheet and some data, you can replicate that kind of strategy. So it's likely not to work, but that's one of the entry-level strategies that you can use. There are then much more sophisticated strategies that people have built that actually have generated a lot of alpha in the market. So that's one category of generating alpha.
You talk about patterns in prices. Clelo, I just need a deeper understanding of what that is. Are you looking at a price that's gone up 10% year on year for 3 years? Are you looking for something a bit more sophisticated than that?
Well, it's just a statistical computation of how prices have evolved in the past for instance, on a moving average basis. And you say, well, that moving average is more representative over 6 months, 10 months, more representative of the business of the business that this company tends to do, right? It's more representative of that. And so you say, I'm going to look at historical statistical patterns of information just in terms of the price movement alone, not profits, none of that, just price movement alone, how prices are distributed, across highs and lows and mediums and so on a daily basis, how much they go up, how much they go down, how much they stay flat and so on. You just take an aggregation of those movements and you project them forward, right? That's what AI is really good at, looking at those patterns. And I always say to myself, there's no way AI is going to be good at this. When I say good at this, good at predicting markets and winning. Because if it was good, then AI could sit here today and tell us which team is going to win the English Premier League, which team is going to win the World Cup, just by looking at patterns of which teams have won in the past. But players change, attitudes change. Feelings change. Something happens on the day. Today, Donald Trump announces tariffs. Tomorrow, he's getting into Venezuela. That's not in the price pattern, right? So that's what it means.
Musa, how hard is this to do? I mean, it's very competitive. Is it easy to execute?
So it turns out, to do it well, so there are funds that have done this well. In fact, the best hedge fund in the world in history has done this, which is Renaissance Technologies. They've generated something like 60 to 70% per annum for decades. Now, in their case, they're employing physicists, people who could win the Nobel Prize or have won Fields medals in mathematics, so the heavy duty work. If you are sitting in your, living room or in your garage trying to, it's very hard to do, right? The point is that if it was easy, somebody would have done it already.
Okay. Clelo, I mean, so when you think that a market is missing a pattern in prices, how do you try and then, so let me sort of put this another way. When you think that, when you're trying to compete on insight, so you're seeing something that other people are not seeing in information that is publicly available. How do you try and do that? Because you're essentially betting your brain against all of the other brains. I mean, this is why investing is fun.
Yeah. So just break it into 4 quadrants, right? It's what do I know that everyone else also knows, right? Now, when I say know what everyone knows, it's not the price patterns. What do I know about this business that everyone else knows about the business fundamentally, right? If you know the same thing as everybody else, there's no way you win, and there's no way they win. That you get average outcomes, right? The second quadrant is, what do other people know that I don't know? At that point, you lose, right? Where you really want to be is what you know that no one else knows, the market doesn't know, right? That's where you win. It's called stock picking success, right? But then there's a 4th quadrant, which is really where risk tends to emerge out of, which is what Donald Rumsfeld called the unknown unknowns. Nobody knows anything, right? We all don't know. And we all don't know that April 2nd is going to happen in terms, tariffs get announced. We all don't know there's going to be intervention with the Fed. We all don't know anything that Russia is going to invade Ukraine, okay? And I tell you what's interesting is if you just limit the exercise to what you know, what other people don't know, or vice versa, right? You can pick some really good companies. You can have moderate success, okay? You want to say moderate success. You can beat the market 55 to 60% of the time. But all of that can be wiped out by what we're seeing now, which is a breakdown. When I say what we see now, by choke points. Choke points are, like now, a breakdown in the world trade and world security system that leads to gold outperforming every asset class. And if you don't have gold, however well you've done in the past, if you don't have it in your portfolio, you've probably lost the last 5, 6, 7 years worth of returns. The market has beaten you by that much. Just think about it. Last year, that precious metal sector went up 144%. I think the financials or industrial sector went up 20% and 30%. You really fell behind. So the way to invest is certainly find great companies, pick them, right? Keep an eye on them, evolve your thoughts as they evolve, as strategies evolve, but be very, very cognizant of what they call tail risks that can upend the best laid plans and take into account those risks. And you do that sometimes by having investments that seem to contradict each other. Like, for instance, have Capitec, but then go and have a gold stock.
Yeah.
Someone says, but the two are not related. Yes, because risks are not related.
Musa, I mean, are there some examples of how you can have genuine knowledge that's in the public domain and still invest better than others?
Yeah, so I think specifically for private investors, regular people on the street who don't invest professionally, they actually are. In fact, they might have certain edges that most professional investors don't. Let's take a practical example. One of the companies I used to cover before it was delisted is Adcock Ingram. They produce things like Panado, Alcoflex, Allergex. Now, if you're a professional doctor, medical doctor, you have a front row seat at what's likely to happen to the flu season. The flu season, how severe it is a good predictor for the demand in that particular product. So if you are a medical doctor, that's one of the insights, things that you are likely to be better at picking up than a CFA, a CA, a professional investor who's, well credentialed. Another thing you can do better is figuring out what occupancy rates at hospitals are. And similarly, suppose you are, in fact, what happened after COVID is what is now known as the home improvement boom. So companies like, if you remember, like the cash builds and so on, did really well. A lot of us didn't see it coming, right? Because we don't work with paint and so on. So suppose you are in building, in construction, you would have seen, well, why are people buying so much paint? Why am I so busy as a plumber? That's an early warning signal that maybe there's a trend in here that people have not picked up. Now, if you're a private investor, that's usually the beginning of the journey. Now you have to worry about the unknown unknowns, the things that could go really wrong, because usually that's signal. So for instance, if you go back to the Panado example, how big is Panado in the life of Adcock Ingram? It's big, but not that big. So how, so it's a signal, but you still need to do the work. How good is management? How levered is this company? Does it have enough free cash flow? What happens if rates go up and down? So these are practical things that you still need to do, but you at least have an advantage in that you have certain types of information that most people are locked out of. And that's really the advantage here.
You're with Investment School on The Money Show tonight. How to beat the market. Hlelo Giyos is Chief Investment Officer at First Avenue Investment Management. Dr. Musa Malwandla is the Co-Chief Investment Officer at Differential Capital. It's 9 minutes to 8.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. ABSA is a registered FSP.
The Money Show.
Investment School.
6 minutes to 8, the time, talking about how to beat the market versus riding the market with Hlelo Giyos and Musa Malwandla. Hlelo, there is an idea, I think, and partly because of what we watch on TV, that people's real insights come from inside information, or they see something that gives them an edge. I mean, I can't imagine that inside information really helps you for long in this game.
Not for long. It's not sustainable. Also just bear in mind, the reason you want to invest is you want to create wealth over the long term. Inside information tends to have a very short shelf life. Its expiry is really a few days. So now there are people that take really good advantage of it. So, for instance, members of Congress, they get to know companies that are going to benefit from legislation, which tends to be pretty transformative. So people like Nancy Pelosi, they're very wealthy because of that, right? They look at national security plans and they know the discussions with, how NVIDIA is going to benefit from this. But those are very privileged people. You are not like them. So if somebody whispers something to you, say thank you, but no thanks.
Musa, are there some legal ways of kind of understanding what the bosses of a company know and what they're thinking? And I mean, every day on the JSE, you'll have, what's the phrase on SENS? Share purchases by, or whatever it is, if you know what I mean, the disclosures.
Yeah, so it happens to be a good signal. So the idea here is that, the management teams of a company usually have inside info, or at least a better sense of how the company works. Now, if they are buying, it's usually, if they're buying a lot in their own stock, it's usually a positive. Especially if they are selling a lot. If they sell a lot all of a sudden, either the valuation could be very high or the fortunes of the company might not be as attractive. Or they could just be selling for tax reasons or to buy a new house. So you have to use that kind of information with care, but some data is behind that.
Don't they also buy their stock in a crisis because they're trying to show the market that they're not worried?
Yeah. So as a signal of confidence, false or positive. So it is, now it's a data point that at least hints, it's a signal that you can use to at least infer what's happening on the inside. And then some people do follow that particular strategy.
So I am old enough to know that some people, particularly men, just want to prove they're cleverer than other people, right? That's all they want to do. And so they work very hard at beating the market. Most of us are more rational than that and are married. And so all we really want to do is make sure that we make enough wealth and that we make it efficiently and easily. Now, that word efficiently, Chlelo, would make me suggest, actually, I'm not going to try that hard to beat the market. I know how clever I am and who's cleverer than me and who isn't. Well, I have an idea. And so I'm going to do something else. So if I've decided I'm not going to try and beat the market, what's the best way to make as much money or to grow my wealth by as much as possible?
Well, if you're not going to beat the market, then you're going to ride the market through a passive product, right? Now you're going to buy the Aussie 40 or just pick an index that represents, that's probably the best performing index. And that's the Aussie or the Capswix, as they used to call it. It's not a shameful strategy at all, by the way. To beat the market, you also have to find someone who's good enough to do that. Now, over the long term, even professional investors, I think about 15% of them beat the market, right? So this is a hard job. It's very, very difficult. It's as difficult as when advocates show up at the Supreme Court, Constitutional Court, and argue a case. Their win rate is very low.
Yeah.
Right? But it's transformative when it happens, and that's what makes justice really worthwhile. That's what makes investing really worthwhile, is if you can find someone that can do that, it's worth it.
Musa, so you need to sort of find out what edge the manager has, and do you need to maybe also look at sort of funds of funds, because those try and even things out?
Sure. So I think the first thing is either look at a passive before you think about investing on your own, which is really an audacious thing to do when you consider how many investment professionals there are. If that is too vanilla for you, then you think about an active fund, an asset manager, and then you have to think about whether they're good at what they do. If that doesn't work, then you go to a multi-manager, a DFM, a fund of funds. Now, their job is exactly to figure out who's the best manager, which kind of investment strategy is likely to work better in this kind of market, and how do you blend different managers together.
Dr. Musa Malwandla, thank you so much for coming in. Good to see you again. The Co-Chief Investment Officer of Differential Capital, Chlelo Giyose. It's been a while. The Chief Investment Officer and Principal at First Avenue Investment Management.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
On the U.S. markets right now, the Dow Jones up 0.75%, the Nasdaq up 0.84%, the S&P 500 up 0.62%. Thanks, I think, to TSMC. We're back tomorrow. Good evening, 8 o'clock.